risk of loss in trading futures and options can be substantial. Therefore, only genuine risk funds should be used in such trading. Futures and options may not be a suitable investment for all individuals, and individuals should carefully consider their financial condition in deciding whether to trade. Option traders should be aware that the exercise of a long option will result in a futures position. Information herein has been obtained and prepared from sources believed to be reliable. Comments contained in these materials are not intended to be a solicitation to buy or sell any of the commodities mentioned. Past performance is not indicative of any future performance. Opinions expressed here are the opinions of the author only and not the opinion of any firm the author may be affiliated or associated with.
All right, welcome back to Commodity Classics. I'm Michael Yorba, your host. My guest this segment is John Netto of Triple Witch Metals Management. Let's bring him in right away. We've got a lot of ground to cover and a little time to do it. John, you got your soccer shirt on again, buddy.
For those of you that watched the Champions League final yesterday, Michael, unfortunately it was aired concurrently with your show, but they saw just a fabulous game. They saw Manchester United and Chelsea, the two best football clubs in the world, two best soccer clubs in the world, go at it. They played to a 1-1 draw in regulation. They went to extended time. They were tied at that point in time. Then they went to penalty kicks. It's a game that just has the whole sports world buzzing right now.
Yep.
And we, on this show, on Commodity Classics, gave out Manchester United as a 3-to-1, at the price of 3-to-1 2 months ago to make that investment, to get down on Man U because they were going to win the Champions League. And they came through. We cashed the ticket today. It's a talk of Las Vegas, baby. And we're ready to give out our next play for the Euro 2008.
All right. Hey, and you also did something else that you didn't bring up. What was it, Big Brown?
Big Brown.
Yeah. You said who to bet on for the Derby. And
Yeah.
It was Big Brown. We didn't get to catch you for the last week's race. But are we going for a Triple Crown here with that horse?
Over and done. Stick a fork in it. Big Brown will be the Triple Crown winner. Big Brown is the best horse we've had in the last 25 years. He's just a complete freak. I've never seen a horse like him. And the ability of him to have another gear. They talk about Casino Drive coming and possibly challenge him around the stretch. Talking about having horses bred for the mile and a half at Belmont Park. It's not going to happen. This horse is the most dominant horse of our generation. He will cruise to a Triple Crown victory. Big Brown taking the Triple Crown. It's done.
Okay. Any odds on that thing at this point?
We're probably looking at him going off at 1-5 or 2-5, and I'm not saying you want to bet him hard, but he's my prediction. You don't want to get cute and try and bet against him. Respect it, enjoy it. If you want to find some value, actually, ironically, there may be some place money because there's going to be a lot of people that want to have that ticket in their pocket of him winning, so there's going to be an over excess of him bet to win. If you look back at his payout scale from the Preakness, he actually paid more to place than he did to win, even though he won the race. So there's a potential disparity there, and that comes about from just the pari-mutuel betting dynamic that goes on from horse racing. So you may want to bet Big Brown to actually place in the Preakness, or place in the Belmont. There may be a little more value for you there.
Okay. All right. What else you got for us? Well, what's moving and shaking there in Vegas?
What's moving and shaking is the heat. It was about 117 degrees here 2 days ago. It's fortunately for us cooled off a little bit, and unfortunately for us, the markets have cooled off a little bit as well. The thing that we've talked about, it's been particularly frustrating for an active trader like me, is just the low volatility we've seen in these markets. And it's not just it's the S&P, the Dow, the Russell. We're seeing more and more of a compressed trading range. So we focus most of our efforts on trading commodities. The fund has gone through some really good times in the last couple of weeks with the rise in both the GDX, the gold stocks we talked about, as far as playing some longer-term bullish positions there.
Right.
And on the metal itself, gold bottomed out near 850. It now reaches high as 935 in the overnight session. I believe it closed around 920 today on the spot. On the 921 is where I'm seeing right now on the Globex session. So I think that gold can pull back to 900. And what people want to pay attention to is look to buy this dip. I think gold has bottomed for the year. I think we may consolidate here, short term before rising higher, but I think the low is in, and gold needs to be traded as if the low is in.
Okay. How are you trading it? Futures, options, funds, ETFs? What are you doing?
We're doing it all. A lot of what I think...
ladies and gentlemen, that is an understatement for this guy. We're doing it all. At the same time, too. All right, go on.
It's a simultaneous, process of multitasking various investment strategies into one overall portfolio.
Okay.
So, looking at gold, I think that when you analyze gold, there's a couple of ways a couple of sectors you can look at, a couple of components that you can look at.
Okay.
The first being, do I want to be long the bullion? The second, do I want to be long the equities? If I want to be long the equities, I can be long the juniors, I can be long the producers, I can be long the royalty companies, and I can be long the support component within that. And I think that the one component, the one factor of the gold market that has lagged considerably behind is the role in the performance of the junior stocks out there. They've been extremely frustrating to us as a fund because many of those stocks are actually negative on the year despite the appreciable rise in gold. And there are a couple of reasons why that's the case. A lot of these companies were actually making more money with gold price at $300 an ounce below than where it is now. Actually, we're more profitable with gold at $650 an ounce than they are with gold at $950 an ounce. I think that dynamic is going to change the next 3 to 6 months. I think the historical relationship between gold and gold stocks, which is really high right now, I mean the value of the bullion compared to the value of the aggregate basket is very high. I think that's going to compress, and as a result, you'll see a rally in gold stocks relative to the underlying bullion. So I think you really want to focus on, while gold consolidates, or what I believe will consolidate in the next 3 to 6 months, the gold stocks themselves will rally. So look for some of those juniors that have been beat up. Look for some of those producers that have been beat up, and take on some exposure with those guys right there.
Okay, I got some stuff in the shout box for you. What's the bottom line on the dollar?
Bottom line on the dollar is that bearish neutral as far as my overall opinion it goes. I think that when I look at the Euro USD, which is obviously the biggest cross in the world, nothing surprises me as far as a consolidation between 152, 153, and 159. I don't expect too much to happen that way, but I do think some of the precious metals, and even the commodities, we're looking at, obviously we've seen what oil has done, nat gas, gold, silver. I think all of those will rally in terms of euro relative to how much they rally in terms of USD. So meaning that gold price in euros will actually see a considerable rise in the next 3 to 6 months in the future. Meaning that I wouldn't be surprised if the Euro USD is at like 154, 155, but gold is up near 950, 960. And that would mean that gold would probably rise like 4 or 5% against the euro, and only rise in terms of 2 or 3% against the U.S. dollar.
Why do you think that it's going to rise faster against the euro instead of the U.S. dollar? Is there a position there that maybe they won't be raising rates as fast over there?
Well, it's not that the ECB has talked about their policy and stance on inflation, but despite what they're doing on inflation, the rate with which they're printing money is absolutely egregious still. Okay. And I just look at where the gold is performing in terms of euros, and it still has some ground to make up. I think it's a nice play to converge. The Fed has obviously stopped cutting rates, but that still is not necessarily a bearish component for gold. If we look back to the late 70s, even when the Fed was done cutting rates in the late 70s, that's when one of the most appreciable jumps happened in terms of the price of the underlying bullion. So looking across the board, looking at the positions that we have out there, we're actually long gold in terms of euros and whatnot. So
tell your girlfriend you have to call her back.
Yeah, exactly. She knows better. She knows she can't talk to me, but like at 11 o'clock at night when I finally have time for her.
I was talking to Gavin from Iowa Grain, who was out there at the conference you guys had last week, and I told him, listen, if you value your married life, you better stay away from John in Las Vegas. We just know
how to have a fun time, man. It's about enjoying the nightlife a little bit, taking in some of the scenery.
I'm going to get off the leash one of these days and get out there.
Looking forward to it, buddy.
All right. What else? We got about 3 minutes left. What else are you rocking on out there?
A little bit what we're rocking on is more about being patient. Memorial Day weekend coming up. Advise traders to keep things light as far as the equity markets go. If you want to focus on, we chase the volatility. Crude intraday has experienced a lot of volatility in that regard. So, Alex, my phone's going out. I need a new phone, please. So crude is going out. Michael, my phone battery is dying right now. That's really unfortunate.
Does that mean that we're going to lose our audio?
No, you're not going to lose audio. I'm just going to replace the phone here momentarily, and we'll be fine. Thanks, bro.
Don't you just love this live TV stuff?
We're back at, see, we didn't miss a beat. And with how fast I talk, we get 2 segments in one anyway, so.
Okay.
So, at any rate, we're looking at the volatility, and I advise most people, if you want to trade short-term, look towards crude oil, look towards natural gas. These are the markets that have the flow to them. These are the markets that provide the intraday opportunity. Overall, though, it's about being patient right now until the equities kind of show their hand again. We have the VIX right now at 18. There's very little fall through. There's very little rhythm. Volume has fallen off considerably in the last couple of weeks, and it's just a chop fest, and it can be the source of a lot of frustration. Bottom line is this. You can catch right now Portugal to win the Euro 2008 at 8-1. They've got the best player, Cristiano Ronaldo. They've got Manchester United's front line in Ronaldo and Nani. They've got Chelsea's back line in Carvalho and Ferreira. And you have Scolari, the coach that led Brazil to the 2002 World Cup. You bet Portugal at 8-1. You do it with the Manchester United money. You do it with the Big Brown money. We push all in, baby, and we keep building wealth here on Commodity Classics.
That was a good ending, buddy. All right, I can't wait to run into you again out in Vegas.
Looking forward to it.
Thanks, man. All right, we'll talk to you next week.
See you next week.
Okay. John Netto, Chief Investment Officer of Triple Witch Metals Management. Ladies and gentlemen, as you can tell from what just happened here on our show today, this isn't for the stuffy people. We have a lot of fun doing this. We turn our passion into profits here. So thanks for watching us. And ladies and gentlemen, don't take that the wrong way. If the NFA, FINRA, or SEC is watching, that's a figure of speech. But we really enjoy bringing this show to you, as you can tell by the people that are on it. Thanks for participating with us. If there's no questions, or some of the questions didn't get answered on the show, go to the social network sites. That's what they're there for. Continue the conversation with our guests and get these questions that you need answered today. Thanks for joining us. I'm Michael Yorba, your host. We'll see you again tomorrow. Oh, by the way, we should be bringing to you, no guarantees, some very, very forward technology that could change the way you watch TV right here on Commodity Classics. See you tomorrow. Thanks.